Wondering how much you should put aside for your tax bill? Well, watch on. As a business accountant, my team and I spend all day long helping small business owners on their journey. And of course, helping owners plan and deal with their tax bill is a key part of what we do. So in this video, I'm going to teach you a really simple tip to help you know how much you should keep aside for that future tax bill. And just for clarity, in this video, I'm talking about self-employed/sole traders. The terms are interchangeable. I'm not talking about limited companies or limited company owners in this one. There's other videos for that. So let's start with a quick story then. I wasn't always an accountant. I was actually a self-employed person first. That's how I started off my journey. I didn't know anything about tax, and it's actually one of the things that got me into this industry is trying to understand what can I actually deduct. How does the tax work? How should I pay no more than I actually need to? I just needed knowledge, and long story short, I ended up requalifying and then training as an accountant and running a business helping small business owners in this area. But back then I didn't know anything, and somebody told me on a training course, they said, look, all you got to do is put 25% of your profits, and we'll talk about that in a minute, to one side, and you'll have enough. And at the end of the year, hopefully you have more. And actually, you can go on holiday with the rest. And oddly, this rule, 20 odd years on, even though the tax rates have changed, has survived the test of time and is roughly correct as long as it's all of your income and you're earning under about 50k a year. And this doesn't work if you've got other big income or you're going over 50k a year, you've probably got to adjust the percentage. And it isn't a hard and fast rule. It's very much a guideline. And I'll show you why it works, but just know, it is a rule of thumb rather than anything specific. So all you should do is, in theory, 25% of your profits you should put to one side. What many of our self-employed owners we work with do is they'll put it into a separate account and just have it sitting there for future tax bill. Now, the reason the 25% rule works is because if you think about it, under 50k, you're paying 20% tax. And at the time recording this video, national insurance is 6% as well. So you might think, well, you just told me there it's 26% if I add the two together, but you're only telling me to put 25. Why? And a big part of that is that you get a personal allowance. At the time recording the video in the UK, it's 12,500 and a bit. So let's just call it 12.5k. You're going to get that tax-free each year. So you're getting that bit free, and then you're paying this 20% and this 6%. So as a result, actually, the 25% should be a little too much. However, the reason I like this one is that how a tax bill works, and it's probably a subject for another video, is if you have to pay over £1,000 a year in personal tax, quite often then you'll be asked to pay half again up front. So you do your tax year all year, there's a line drawn, and then you get to the following January to pay that tax bill. And on that day, they'll want the tax for the year and another half up front. And actually, and I'll show you in this example, you can see that if you do this, you've got roughly the right amount of tax you would need by the time it comes to pay. And if you keep putting aside the 25% all the time, you'll always have this float that works quite well. I think the biggest challenge is actually figuring out what 25% of profit looks like to you. Now, for most sole traders, if you're in a service industry, a lot of it goes straight to profit anyway, but it's because it's not an exact science. I think you've just got to do your best guess with it. And I think the most difficult one sometimes is if you're in a product business and actually you're taking that money in and then buying more stock, it could be quite difficult, and you might have to rely on some actual figures rather than just your bank balance. But if you aim for this 25%, it'll put you in a good stead for that tax bill. And you might be thinking, that's cool, but I have actually got another job. How does that work? Well, watch this video and it'll tell you all about that.